What's up, everybody? Welcome to the Stocks channel. In tonight's episode, we're doing another stock market technical analysis update. But before we get into the charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. First up, we have the ticker symbol SPY, which is the S&P 500. And let's go ahead and crack open this chart and see what's going on in the stock market today. All right, so we see here on the SPY ETF, we closed up about 0.35% today, and we are continuing to extend this bull run. Now, if we switch over to a 1 hour chart, we do see that we opened this gap yesterday, and we're setting up a situation where we did hit our upside price targets, and we could see this island reversal in any event that we get a gap down below the gap up, which would signal a reversal sign. But right now, if we zoom out, we still see we have this very bullish uptrend, and we're not calling a top. We're going to continue to watch the price action in the technicals, which right now tells us that this bull run is not yet over. Now, we do have this other price target up here in the $353 range, and it is possible that we will see that price target given the current price action that we're witnessing and the current technicals showing that this bull momentum is still not ready to leave the market. Now, we do see the price action starting to get pretty far stretched above the 200 simple moving average. And if we measure this as a percentage of a move above the 200 simple moving average, we're approaching a price level that's 12% over the 200 simple moving average. Now, how does that compare to some of the previous price levels in the market? If we go back to the high in February before the crash, we were trading about 11.5% above the 200 simple moving average. If we go back even farther than that, going back to July of 2019, we were about 9% above the 200 simple moving average before we saw that pullback. If we go back even farther, back before the 2018 sell-off, we were trading above the 200 simple moving average at about 7%. And if we continue to go back in early 2018 in January, we saw the market go on this monster bull run, and we were actually trading to almost 14% over the 200 simple moving average. And you could see the drastic sell-off that came after. So by no means is the market considered cheap right now, and we are trading almost 12% over the 200 simple moving average. So prices of the S&P 500 ETF SPY are starting to get very stretched. And at these levels, there's a real possibility of a profit-taking correction, which would be very healthy for the stock market. So in any event that we have a sell-off and we're going to have a profit-taking event, we're going to watch these support levels below us from these gaps and from these previous support levels that we've seen in the market. In any event that we have a pullback, we have this first support level here at the gap, which is about a price level of $340. Below that, we have support levels at $332, $330, and $327. So we have a lot of support below us in any event that we have a pullback. And from today's close to the lowest support level that we have here is about a 5% pullback. So now that we've hit our price target, if we do start to see a correction, we're going to expect to see that correction pull back into an ABC pattern where we have a pullback, a bounce, and then a further pullback before ultimately completing our correction and then heading higher on the uptrend in the event that the market wants to continue to go higher. Now, a correction is becoming a real possibility now that we've hit our price targets and the market is starting to get stretched. But we do have to respect the fact that there is not a lot of short sellers in this market right now. Now, one interesting thing to note, if you look at this Goldman Sachs research chart, it does show that there is a very low short interest as percent of market cap in the S&P 500 right now, which basically means that short sellers have gone away and they're not willing to try to short this market at this current time. Now, that doesn't mean they can't come back at any time and decide to short this market, but this market has burned so many short sellers in this monster bull run that they literally are just giving up on shorting altogether. Now, there is still a possibility that short sellers are going to come in at these highs and we would see a short squeeze, which would bring us into this 350 price target range before we ultimately saw this correction. So right now we're still following the price action and following the technicals, and with another close above the 5 EMA today, and we still see the 5 EMA well above the 13, we still have a very strong bull trend, and it's still increasing the probability that we're going to continue to see higher prices until we see some kind of reversal in this trend. Now, if you remember, I said in last night's video, we did have this island reversal top in early June, which was our first indication that there was going to be some sort of correction and sell-off, and that went hand in hand with some other indicators that we covered last night as well. So we will give you an update on those indications, but it's still a possibility that we did have this gap up and hit our price targets around the same time before we ultimately see that correction in the stock market. But strictly following objective analysis and looking at the price action and the technicals, we see the S&P ready to go higher, and we do see a lot of support below the price level with only about a 5% correction before ultimately finding significant support. So now let's jump over and take a quick look at the triple Qs, which is our NASDAQ 100 ETF. And we do see another very bullish close on the NASDAQ 100, closing up about 0.8% higher. Now we still see the NASDAQ 100 trading above the 5 EMA as well, and we still have the 5 EMA trading above the 13. So remember, that is very bullish, and our upside price target on the NASDAQ 100 would take us to a price target of about 292. Now, since we took a look at how high above the 200 simple moving average we're trading on the S&P 500, let's also take a look at the NASDAQ 100, and we see that we are currently trading about 27% over the 200 simple moving average. Now, how does that compare with previous price action in the past? If we scroll back before the March crash, we were trading about 20% over the 200 simple moving average. And if we keep going back in time, we see here in July of 2019, we were trading almost 12% over the 200 simple moving average before pulling back. And here in April of 2019, we were 10% over the 200 simple moving average. And if we go all the way back to August of 2018, we see we were 12%. And then in February and January of 2018, we were anywhere between 15 and 16% over the 200 simple moving average. So you can see as the market gets far stretched over 200 simple moving average, it is highly likely that there could be a sharp pullback correction, and that is a very real possibility. So look at some of these numbers. We have 15, 16, 12, 10, 11, 20, and right now we're currently 27% over the 200 simple moving average. These purple lines down here are also volume weighted average price, which basically gives a price moving average based off of the volume that's buying at certain prices. So we do see volume weighted price averages way lower, and we do see that we're trading well above the 200 simple moving average. Now you can also look at the VWAP, which is trading right here with the 200 simple moving average. So I'm not saying we're going to have a correction all the way back to the 200 simple moving average, but it does show that the NASDAQ 100 is very stretched at these price levels, and the percentage it's trading over the 200 simple moving average is just indicative of how far and how long this bull run has went from the March lows and how quickly it's done so. So I would not be surprised to see any event that there is a sell-off that it could be a steep correction. Now that's not to scare you, and that's not to tell you to start panicking. We still do have very bullish price action and very bullish technical trends, and we still do have a lot of support below where we're trading right now. So on the NASDAQ 100, we do have support on the Qs at about $280, at about $275, and then down here around $265. So if we went to the lowest support from today's close, that would be a pullback of about 7.5%. So that is a very real possibility in any event that there's a correction. And right now, it's still looking very bullish, and the price action is still saying that these markets want to go higher. Now let's jump over to the Dow Jones Industrial, and we're looking at the DIA ETF here. And we see that the Dow Jones took a day to cool off, even though the S&P 500 and the NASDAQ 100 went higher today, with the Dow Jones closing about 0.2% lower. Now, we did have a good day on the Dow Jones yesterday, and we did open yet another gap below us on the Dow Jones as well. But we still have a price target on the Dow Jones to close this gap from the March crash, and that would bring us to a price target of about $289. So we do see a very bullish trend on the Dow Jones, and we do see a likelihood to test this previous gap before ultimately having that correction if it's going to come soon. Now this vertical line here shows the end of the month, and it's possible that we rally into the end of the month and possibly see a correction in September when volume starts to return after the summer lull that we usually see in August. Now this has been a very bullish August, and August is typically a month where there's not a lot of action, but we have seen a lot of upward price momentum in August, and it could just mean that we're going to see a correction later than expected. Now remember, when we hit these upside price targets, it increases the chance that we're going to see a correction because we cannot see the price go up in a straight line forever. Now we do have these healthy pullbacks in the stock market. As you can see all over here, we had a pullback here before resuming upward, another pullback here before resuming upward. So the pullbacks are very normal and they're very healthy for the stock market, and we're expecting to see a correction in these broad indices in the very near future. So now let's jump over to the VIX, which is our fear indicator. And we did say last night that we saw a warning sign that the VIX was actually going higher while the market was going higher, and we want to see the VIX go lower as the market goes higher. So today we did get a close below the 5 EMA, which is good because the S&P 500 went higher, so we did see a positive correlation there. However, we do see that the VIX was trading above that level almost all day, and we didn't come down from those elevated VIX levels until the last 4 hours of the day. Now that's okay because we're only looking at closing prices, but as long as the VIX hangs around in this area and shows that it put a bottom in, it only increases the risk that we could see a spike in the VIX, similar to what we saw here in the beginning of June, where the VIX sort of hung around this bottom and then elevated very quickly and fear entered the market. So as long as the VIX is finding a bottom like this and we see this support level building in this pivot bottom, there's still a high likelihood that there's something going on underneath the surface and there's still going to be this spike in fear. So we really want to see the VIX start heading down to this $18 level that we had for the crash when the VIX had gapped up from 18 all the way up to 22. So we see that gap acting as support and the VIX is struggling to go down to that $18 level, which is another warning sign that we need to pay attention to. But overall, we had the VIX close 1.5% lower today as the market went higher, so that is a very bullish sign and we still see price action continuing to grind higher. So let's check out some of the sectors controlling the market, and first up we have the financials, and we did see the financials start to bounce and break back up into its bullish pattern after the breakout of the consolidation wedge that we had here. Now we did see the 5 EMA cross back above the 13 EMA, and that is a great sign because we want to see the financials come up here and test the 200 simple moving average. And ultimately, we're looking to see if the 200 simple moving average is going to act as resistance or if it's going to get blown right through and the financials are going to form a higher high. So we do have financials forming higher lows already, so we do have a bullish technical pattern, but we do need to see a confirmation of this bullish trend by forming a higher high. So we need to take out this previous high and show that the financials are ready to break out of this consolidation and form another bullish upward trend. Now we need to see financials break out to the upside because we should not be seeing the S&P 500 continue to grind higher while we're seeing weakness in the financial market. So look for financials to continue this bounce upward and test the 200 simple moving average, and we're going to see if it's going to get rejected at resistance or if it's going to continue to go higher and form a new higher high. Let's take a look at industrials, and we see that industrials also took a day to take a slight cool down period, and we still see a very bullish upward trend with the industrials already forming a higher high and higher lows. So overall, the industrials are still looking very bullish, which is great to see. And we still see the 5 EMA trading above the 13 EMA, which tells us there's a lot of momentum in the bull camp, and we're still seeing that upward momentum on this market. So if we could see financials catch up and start carrying some momentum in the bullish direction, that would be a great sign that the S&P 500 should continue to go higher, which would mean that the correction would be a great dip buying opportunity to capitalize on the next move higher. Jumping over to the healthcare sector, we see that the healthcare sector decided to wake up today and had slight green, and that kept the 5 EMA trading above the 13 EMA, which is a great sign. We don't want to see the 5 EMA start to cross below the 13 because that would tell us that bullish momentum is leaving this market, and we really want to see all of these sectors becoming bullish and remaining bullish if we're going to see the S&P 500 continue to grind to new all-time highs. So overall, nothing super impressive with healthcare, but we did maintain the bullish trend with today's close, which is a positive indication and a bullish sign that the markets want to go higher. Jumping over to the US dollar, we're looking at DXY, and we see that the US dollar took a day to cool off, closing down about 0.3%. Now we're still waiting to see if the US dollar is going to have this 5 EMA cross to the upside and potentially take out this previous resistance level, which would show us that the US dollar is having some strength return to it. Now we expect to see assets inflate as the dollar continues to weaken, but if we see the dollar strengthen and break through this resistance level, that would tell us that the asset prices need to go through that correction, and we would expect to see a sell-off in the stock market as well as other assets like gold and silver. So we're looking to see if the US dollar is going to continue this upward trend and break through resistance, or if it's just going to come down here and continue its downtrend and act like these support levels were never even there. So let's take a look at gold, and we see that gold is still stuck in our consolidation pattern, and we're just waiting to see if gold's going to break to the upside or the downside before taking a position on this trade. Now right now this is a very tight wedge, and we see the consolidation is getting tighter and tighter, which is building up energy for the next move. So in any event that we see the dollar weaken, we would expect to see gold blow up to the upside and possibly form new all-time highs. If the dollar continues to strengthen, we would expect to see a breakdown in gold, and we would expect to see a downtrend begin to form. But right now, we're not calling if a wedge consolidation is going to break to the upside or the downside. We're going to simply watch and wait and let it tell us which direction it wants to go. All right, so now let's take a quick look at Apple, which is our market mover stock. So we want to pay attention to what's going on in Apple. And we did see Apple took a day to cool off a little bit, closing down about 0.8%. However, this chart is still very bullish with Apple still trading above the 5 EMA. And if you look at these moving averages, you can see that they are stacked in a very bullish separation, with the 5 well above the 13 and the 13 well above the 20, with a lot of upward momentum. So right now there's still a lot of FOMO type of price action going on in Apple right now, and I would not be trying to short a stock with this much power and this much momentum. So we're waiting and we're going to watch to see if Apple can close below the 5 EMA, and we're ultimately wanting to see the 5 EMA come down here and cross below the 13, which would tell us that there's weakness in Apple, and we're going to expect to see Apple weaken as the rest of the stock market is ready for a correction because Apple is a market mover. So ultimately, we want to see Apple come down here, bounce off of this support level from where it broke out and gapped up, and then ultimately continue an upward trend. So going back to the S&P 500, we do have risk in this market that we need to acknowledge, and we do have our upside price target met. However, look for a continuation of this bullish trend in any event that we continue to grind higher. We're going to look at a price target of 353 next. Now, right now, all the price action and all of the technicals are still very bullish. So I can't stress it enough. Do not try to short this market unless you have a crystal ball, because this market could continue to stay irrational far longer than you would think, and we could continue to see price action grind higher for another month or longer. There's no way to know when the top is in unless we see the price action and we see the technicals tell us something. But currently, we're seeing a very bullish trend, and we're expecting to see the S&P 500 continue to grind higher until we see something in this chart change that tells us that there's a breakdown in this trend. So right now, this trend is still very strong and very bullish, and I would not try to short a market that is this strong. Short interest is at basically all-time lows, going back all the way looking at 2004. So there is not a lot of short selling in this market because it is so hard to call a top, and anybody who is trying to short before now has already been burned and probably gave up on trying to short. So wait and let the market tell us when the top is in. Don't try to predict a top. So please remember to like this video if it helps you out, and subscribe to my channel to follow along on all of my updates. Thanks for watching, everybody, and as always, I will see you in the next episode.